215, we'll take that. 215,000 unemployment claims. That is better than expected. And I want us to think about something, okay? Because I was on a train of thought here before the data that I want to get back to. A lot of people are trading with their politics right now. And I want to encourage everybody in this audience to refute that. The silent majority, the 90% of us that don't make all of our decisions because we like or hate Trump, are actually just trading the data, and we're focused on what we see in front of us, not this skewed, strongly polarized view of the world. Look, if you think the world is, this is just my opinion, this is straight up my opinion on the matter. If you think the world is either going to be an amazing place or a terrible place based on who the president is, I really think, okay, like I don't care, like for the rest of your life, you do you, this is not a politics channel. But for trading, if you really let that completely dominate how you trade, you're setting yourself up for failure. Look, people did it under Biden. People are doing it under Trump. People trade their politics so hard, and it's such a mistake. Because if you convince yourself that this market is going to go to zero because Trump is, you think he's a big old idiot. If that's your opinion, fine, but leave it out of your trading, because the market can still go up under Trump. It did incredibly well under Trump in the last time. And guess what? It also did incredibly well under Biden. It's not about your politics. The market tends to go up when you have, it's not just the president. That's what I'm saying. So when you're looking at this market and you say, okay, people are fearful of major economic recession, and you get a number like this, that's kind of just, you can't ignore that, right? A lot of people will ignore this. They'll say, oh yeah, no, but Trump's still going to wreck the economy. People did it under Biden too. So I'm not here just defending Trump or just defending Biden. I'm saying leave them out of it for a second. Just look at the data. The data is not suggesting right now, and this could change, but right now we're not seeing massive recession, brink of disaster stuff. Let's get a reality check on this stuff. Can we do just a reality check on the economic data for a second? I think we need that more than ever right now. Right? Let's look at the data. Can we just ignore politics for 2 seconds and just say CPI is at 2.4%. Unemployment rate is at 4.2%. Those are great numbers. And they've been great numbers. I'm not saying those are great numbers because Trump saved the day. No, they were good under Biden. We made a lot of progress. Powell and team did a remarkable job, in my personal opinion, given a pandemic, an invasion of Ukraine, inflation like crazy. I think they've done a relatively good job given the very difficult task that they had at hand. And here we are, unemployment rate at 4.2, CPI at 2.4%. Right now, seems like a pretty soft landing to me. Now that could change, right? The thing is, the future is untold. We don't know what happens in the future. Maybe the tariff stuff does cause a big recession, but I'm not a big speculative economist. That's not what I do. I trade the markets that we're living in today. And, I may look into the future a little bit more in depth if I'm trying to invest long term, but I'm mostly looking to trade actively. And so, here's the environment, right? The environment's been pretty solid for the last 2 years. We've had a really good last couple years in the economy in terms of inflation coming down, unemployment rate staying strong. As far as I'm concerned, these two things are like your biggest indicators on this list: unemployment rate and CPI. And the reality is they're in pretty decent spots. Could the economy get better? Sure. Could it get worse? Definitely could get worse. But right now, that's the environment that we're in. So when I look at like stocks and people freaking out and saying, oh, certainly we're going into a recession, all this, I just don't. People have big opinions and they're often wrong. People have huge opinions on everything. But I just found in my trading, what helps me the most is to stick to the data, and I put a lot more emphasis on the hard data, even though many people would accuse me of, lagging the forward indicator stuff. But the forward indicator stuff is not always right either. The future is very hard to predict in markets. So I do rely heavily on backwards looking data to give me the facts, not trying to, a lot of people have like a very heavy bias about what they see happening in the future. That's the difficulty with future looking stuff, is there's a lot of bias in there. And people are inherently not good at predicting the future. It's very hard to do. There's an expression, I'm going to butcher it, but it's like predictions are very hard, especially when they're about the future, and especially when it's about the economy. It's just a very difficult thing to predict. So I don't try to play that game. I don't try and predict, where the economy is going to be in 6 to 12 months. That's a very difficult game to play. So I'm looking for the environment we're in doesn't look as disastrous as the news headlines. To me, there's opportunity to the upside if price action agrees. So I look at the fundamentals, and the fundamentals overall look decently okay in terms of those two key statistics. But I'd like to see some better data. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show.
Yeah, I'm still trailing it. Not on the 1 hour chart, but more on the 4 hour and daily. So my stop loss is, I think, somewhere around this low right here. I'm trying to leave some room because the market environment is still pretty risk off. So this could still continue going up. Why is this my chart of the day? Well, because on the daily chart, it looks very impulsive. Okay, now it's retracing just a little bit, but the last, let's say, 10 candles have been really interesting. And there's a lot of momentum behind this. I mean, if you're a swing trader, currently it's a very risk-off environment. There's only a couple of things you can trade. That is going to be gold. That is going to be maybe going along the Japanese yen. But the yen pairs are kind of struggling now a little bit, or going short the dollar. That means going long euro dollar or the pound dollar. So you're kind of limited right now. Not a lot of things are moving. The strongest one for me is going to be gold, and the chart of the day is going to be gold. I would like to see it pull back a little bit because, I mean, this chart just looks, even on the 1 hour, it looks really strong and maybe a bit overextended on the daily. Definitely a lot of momentum, so maybe a pullback could happen. And if we do pull back a little bit like this, maybe to this level of support, and then get a bit of a bounce, an entry like a flag or a break and retest, I would be happy to look for some possible scale-ins, or if I get taken out of my position And if price retraces a bit more and then bounces back and I get the confirmation from the edge finder, I'll be very happy to look for some flags or break and retest setups to get in on another buy setup. So my main story right now is the risk off environment. Not a lot of movement in terms of tariffs. We're kind of possibly waiting for that 90-day pause to let's say pass, and then we will get some more clarity. And that's about it. So gold is the best.
Very nice. Yeah, gold is absolutely just tearing to the upside. And I put out a chart yesterday just on my socials. So far this year, not very glamorous, but I'm up about 1% on my account, which is not great. But considering a large part of my account is also like swing trading stocks that I like, which have gotten crushed, I'm feeling okay. Like I'm up 1.2%, actually probably a little bit more today with the bounce back in stocks. So maybe let's say 1.5 to 2%. And so I'm feeling like, you kind of have to count your blessings in a year like this. This has been a volatile, crazy year. Everything's moving so violently. So yeah, gold has definitely played a big part, me personally as well, in this year's kind of holding it together year for me. I mean, it's not by no means an amazing trading year for me at this point, but it certainly is a holding it together year, which you're going to have those. So we'll see how it all plays out. Miko, if you don't mind sharing your screen, I'd also love to hear from you in terms of chart of the day. You've just had movements on all fronts: dollar, yen, metals, indices. Definitely curious to see what your chart of the day is.
And I would say you should be pretty happy, Nick, that you got all of these stocks at a massive discount. So although it currently looks pretty bad, I mean, you're getting at these amazing prices, and it's going to bounce back sooner or later.
I think
and
long
then you're going to be, it can turn out to be your biggest bear. Yeah.
All right, Miko, what you got for us? You got gold too?
Yeah, I mean, actually, I was actually going to do gold, but then market did gold, so I'm not gonna.
Fair enough.
Yeah, but
your second chart of the day, then I guess.
Yeah, second chart of the day. I like pound USD longs as well.
Okay.
I've had my eyes peeled on buying the USD majors, so pound, Aussie dollar, New Zealand dollar this week, but they're just been flying annoyingly. So I'm kind of waiting for a pullback, and pound USD probably looks the best to me. It looks like price is looking to head towards 1.34. We had a really aggressive sell a couple of weeks back, and then price has completely erased all of that. So now I'm just looking for a pullback of this bullish move to continue the buys back into the high. USD still looks really bearish to me as a whole. It might be due a bit of a pullback soon, which would be good because then that could help pound USD pullback as well. But yeah, I'm looking potentially for the retest of the daily high here at 1.31 for a buy, or if we come a little bit deeper, 1.3 as well. Some prior resistance there too, which I like. So I think because of how much momentum there is in the market, probably we might see this as the best case scenario. We might not get that bigger sell, or at least not yet anyway. But yeah, pound USD looks really bullish. A lot of momentum in the market, healthy price action. We've taken out these highs as well. So if I can find a pullback to either one of these areas, we'll be happy to find a buy, and potentially 1.34 on the horizon.
I like it. And I had a question for you too, in response to that chart, Miko, with the pound dollar. So let's just say, so you mentioned it's moving real strong, lots of momentum to the upside, and you're looking to be a buyer. Let's say you take that first attempt. Would you, and this is how I typically do it, is I treat it like a quote unquote campaign where I'm taking multiple attempts, because entries are just hard. In my experience, no matter how long I've done this, entries are just difficult to get right. Timing is really difficult. So what I'll often do is I'll take an initial attempt with a stop, and then a second attempt and a third attempt. That's usually like, I call it a campaign, because I just refuse to believe that entries are easy. Everybody seems to, love to think that they have sniper entries all the time on social media, but in real world times, entries are hard. I don't know about if you guys feel the same way, but I struggle more with entries than I do with exits. I feel like I'm pretty good with exits, but it's entries. Entries are the harder one for me personally. So I'm curious, how would you approach that idea, Miko, from like not just a single trade idea, but from a, multi-trade, or like, what would you be looking for in order to potentially try more than once if you had to?
Yeah, so I completely agree, because essentially with an entry, you're trying to pick a bottom or essentially where market's likely to do something. And that could happen anywhere because we have limited information. So based on that information, we're trying to predict where the market's going to do something. And yeah, it's going to be very difficult to get that right. And of course, a big thing as well is stop loss as well, because if you have a very wide stop loss, maybe your entry doesn't matter as much. But if you have a tighter stop loss, well, then the entry becomes very important, and potentially you might take a few more losses based on that. But yeah, with this pound USD idea, the idea is that there's a lot of momentum in the market. We're likely to continue up, and these two areas look good to me as an area where we might buy and continue that move. So I will bet the same risk on both opportunities. If price was to get here and I see a valid opportunity to take a trade, I'll get involved. If it doesn't work out, then this is the second area, and I'll do the same again. If things look good, meets my criteria, I'll take the trade. But it depends on the opportunity. Sometimes there's only one area that looks good to me, so there's only one opportunity. Sometimes there might be three, and I'll kind of treat each level with the same attitude, that each one of these levels could be the level that does give us the room to the upside. So with my entry, it does depend on the circumstance, but what I normally do is I have a bias. I expect price to get to maybe X in terms of price, and then I'll spot levels that meet my confidence, and there might be one, there might be three, and I'll treat each level as they potentially could be the level that does send price higher or lower.
That's a great answer. And, even one level, right? So like, here's something to think about. And I want to ask Marco to weigh in on this too, because entries, again, I think this is probably one of the most valuable conversations we could have for the average listener, because what do we all learn? Like when we first look at YouTube, everybody's like, this entry strategy is going to make you rich, right? Or like this one strategy, this one timing indicator, or this one, price action pattern. And I think we kind of have to destruct that a little bit, in my personal opinion, because entries are just so dang hard, and they're never going to be easy because of the nature of the market. The market has so many factors that are making price move that it's just going to be hard to get the entry perfectly correct every time. Even if price action looks perfectly well, what if Trump comes out and tweets something, or Powell says something? Like, there's just so many things that can offload a trade. So like, let's just say, for example, that there's this idea and we like pound dollar longs here, and this happens and you stop out. But then what if the market actually starts to climb back and regain that area? Maybe I might actually enter the same area once more now that price action. So we could even have the same level produce more than one entry for me personally. Like I'll oftentimes, if I see something like that, like we fake out, I get stopped out, and we get this kind of move, I could actually re-enter and try that same level again, as long as I still like, for me personally, the fundamentals of the trade and the technical overall trend. So just something to think about. The last thing I'll say, and then I want to ask Mark about this too. Entries are harder, in my personal opinion, the lower the time frame you go. So if you're looking at like a weekly chart and it's like a really obvious level that many traders might be looking at, I find that to be a more, and again, also what that goes with is oftentimes a larger stop loss, a wider, room for error. So you don't get those trading opportunities as often, but I find those to be a little easier in terms of entries than like trading on the 15-minute chart, trying to time entries. It gets very difficult because there's just a lot of noise and blips in both directions.
We had the European Central Bank cut rates this morning, and we had jobless claims come out slightly lower for the US dollar. I'm just going to take some time and just show you what I came across today. So I was looking at some bank reports, as I normally do. So we do have the UK CPI set to accelerate in Q2. We're not going to go into that just yet. What I want to show you here, so this was sent out by Goldman Sachs. So they have recently increased their end of year forecast to $3,700 an ounce, and that's based off ETF holdings and central bank buying, with obviously risk skewed to the upside. We all know the markets are risk off at the moment. Now, the interesting thing is in the tail scenario of the Fed subordination changes in US reserve policy, they could forecast 4,500, and this is by the end of the year. So it's the end of 2025 target on gold. So initially, this is their first target, and this is mainly based on if nothing changes. So if we don't see any huge escalations. We don't see a massive loss of confidence within the dollar. We don't see massive quantitative easing. We don't see a massive risk-off move, such as, you know, another pandemic or a huge war breakout. 3,700 could quite easily get met. However, that doesn't mean 4,500 isn't possible. I'm not going to target 4,500. There's not, you know, I'm not going to sit here now saying I'm going to target 4,500 for the end of the year. I think that might be a little bit too optimistic for gold prices, but it's, you know, definitely not impossible. As I was saying on yesterday's stream, I remember being sat here with Nick a couple of months ago, and we were talking about 3,000. I was sending Nick an article. I was like, "Oh, I'll see you at 3,000," and you know, we've smashed 3,000 long ago now. So yeah. Pay attention to gold. I think it's still got higher to go. Now, I would expect some profit taking. I wouldn't say it's going to be like a huge crash or a huge downside move, but just some sort of pullback here would make a lot of sense. We've not really had a major pullback. I guess back on the 8th, so 10 days ago, we did have a pullback, but since then, it's essentially just rallied. So I would expect some sort of a pullback from here. That would then allow price to come and meet this 200 moving average. It would also come into this fib zone with the 0.5 and the 0.618, aligning with previous structure. The RSI, excuse me, the RSI would, you know, ideally also become oversold. So it's technically a perfect setup if we can see something like this and then go higher. The problem is with trades like this, and I don't particularly like it because I like to have a hard take profit at previous structure. But with gold, we don't have that because we don't have previous structure. You know, we're creating all-time highs. So really, it would be a case of just trailing stops. And I would trail them quite loosely in this case, because if I did manage to get into gold, I wouldn't really want to get out until the end of the year. I'd be quite happy to hold on to gold for a significant period of time. So we'll see how this one develops, how it goes. But this is the idea for now. What else do we have on here? Let me just take a quick look. So Trump is working very hard with the UK to find a trade deal due to the importance of the relationship between the US and the royal family, specifically the king. We're also expecting the dollar to continue lower. So this is from ING. Conviction levels are high that exceptional US growth has been eroded and that the dollar needs to come lower. Some fear also remains of Washington trying to force trading partners to accept stronger currencies. Expect the yen and the Swiss franc to stay in demand this quarter. Yeah, that's pretty much it. We could also see the dollar. So this is from ING. We could see the dollar to stall, go to around 100.25, 100.5 before we start seeing it break even lower beyond the 99 level. Euro pound also expected to come down slightly with a slight retracement. But yeah, that's pretty much it in terms of notes I wanted to cover with you. Obviously, ask questions if you do have any. Let me just see what's going on here. Yeah, I'm waiting for a pullback on gold as well. I can't justify buying it right where it is. Ball out, Igor is gone. We have a fallen soldier, although I'm not sure he was a soldier on our team. Where's he getting this info? Jay, I'll tell you where I'm getting this info. So when you're as rich and as successful and profitable as me, this guy called Inner Circle Trader, also known as Michael, will come up to you and he'll say, do you want to join the real Inner Circle? Obviously, I said yes. And then he sends me these files every day of top secret information about where the markets are going. So, you know, it's just an infinite money glitch, essentially. Sweatmore mines boggle me. Yeah, it's just different flavors for different people, I guess. No, seriously, they're just from bank reports. So we send them out in our Discord every day. We get them from the large institutions. I heard it a conspiracy, which made me laugh. I was showing a bank report to someone on Twitter, and they were like, "Yeah, it's made so they can manipulate you, so the institutions can tell retail traders where to go, so then they can use them and get their money or something along those lines." I'm not gonna go into that, but the reports are made for clients of that bank or that institution. So obviously they're not just putting them out on the website for everyone to get. It's a case of if you're not a client that's at that institution that's invested with them, you're not going to get the report. So it's like, okay, so they're using, HSBC is using their own clients for liquidity. Okay, that's cool. Interesting for me. How much you want to bet you're going to close that gold trade at 1-to-1? No, Cedric, I've already explained the 1-to-1 thing. So I was doing 1-to-1s last month and this month because I didn't really have an idea on the markets. I didn't want to hold anything. But with gold, quite happy to hold gold because I've got a long-term view on it. The same thing as Swiss yen. I'm quite happy to hold that one as well. But when I've got no long-term idea about what I'm actually wanting to trade, I'll quite happily just take profits and get out and maybe re-enter if the short-term idea is still prevalent. Humiliation ritual to join? Yeah, unfortunately so. I'm not going to tell you what I did, but bad times. ICT got kidnapped for sharing the info. It's all right. I already got kidnapped. But mine was on a different level. There's this beam of light in the sky and the UFOs came down and I was like, oh my God, got probed and everything. But that's a story for another day. We're here to talk about the markets. Anyway, let's get back on topic. So what are we discussing? So the European Central Bank cut rates by 25 basis points this morning. It was widely expected. So it wasn't a huge shock, but it has applied some pressure. Oil seems to be recovering quite well. I would still quite like to go short on. I'm just going to actually scrap that. No, I don't, because the Edge Finder's changed, doesn't have oil at the moment. So we've got Aussie US dollar as the most bullish reading. We've got Euro dollar at 10. The FTSE does seem attractive. And this is what I was going to mention earlier, actually. If we go back to what we were looking at here. So we've got the UK CPI set to accelerate. So that tells me the Bank of England is going to struggle to cut rates further. However, we did have lower CPI come out already for the UK. I think it was yesterday we had lower CPI come out. I think it was 2.6, previous was 2.8. So I'd quite like to get long on the FTSE short term. So something maybe just back up to these previous highs, then start looking to go into a short position later in the year towards Q2, Q3, or sorry, the end of Q2, start of Q3, and looking to short the FTSE probably back into these lows. So we'll see. That's planning 2 trades at once, which I'm not very good at multitasking, but I think something maybe along these lines. Obviously not the entry here, but you get the idea. Yeah, something maybe a bit like this. So we'll see.
So New Zealand on top, Swiss on the bottom. Nice. 120 pips between those two. Swiss on the bottom makes me happy. It's like better than the fruit on the bottom yogurt. So anytime I'm seeing Swiss on the bottom, that's good. I do wonder also if the Swiss is going to intervene at some point. They've been very quiet, hands off the wheel, but their interventions that we saw back in 2011 and 2015, completely rocked the Forex market. And we're still sitting at historical levels. Like the Swiss has been like this. Well, here's why. And I'll make another interesting proclamation. I think that if gold finds the 200 moving average, the Swiss franc is going to weaken because of that. There is an interesting correlation between Swiss franc and gold. So if gold does correct, okay, and again, I say the flip side of that is if gold capitulates even higher, Swiss is going to get stronger for another potential crash move, which would not be fun. Okay. But if we do see a correction in gold, I think the Swiss is going to go with it. And some of my positions I have that have been legging into for a while are hopefully going to work out. So something to keep in mind. I wouldn't be surprised if gold getting weaker. If gold gets weaker, Swiss probably gets weaker along with it. Japanese yen continues to grind higher. I'm still long FXY. So I'm back. This is kind of nuts. I'm back up towards... It's not huge gains here, but I do have some shares of FXY. I might be up a couple $1,000 here. FXY, I'm up $3,000. Let me see. Do I want to hold more? I mean, we had a whole volatility event on the Japanese yen, and now FXY is just slowly going I don't know how much higher I expect this really to go, but I guess we find out. Dollar yen is kind of the inverse of this, right? So it might be wise to, if we've got dollar yen coming into lows and potentially symmetry here, would anybody be shocked on the dollar yen if it holds this level and then bounces back off of it? If that's the case, I probably need to take some profit on FXY. So maybe that's not a bad spot just to grab some profit. I kind of hate taking profit on FXY because it's been just a nice little hedge trade, but I'm not up, I'm not killing it. I'm up $2,800, big whoop, but I think I could sneak in, maybe a run to like 66 or so. So 65.88. If I get another dollar out of that, it'll be, I don't know, they're like 600 to 800 bucks. I'm going to put a chart alarm here at 65.50. If we get there, I'll start looking to take some profit. Here's another technical formation. Is it possible that this is a range where we just go from high to low, high to low, high to low? Is it a range, or is this the potential bottom where we have a low and a center high? And if we actually break above this, are we about to see some Japanese yen love? That's a question mark, but could I take a $64 position that looks like a profit target at 65 and take it up to 75? Well, that'd be a much bigger win. So I think in terms of just holding the shares, I'm just good holding the shares. If this could pay me $6,000, $7,000, $10,000, or I can get back in for more shares down here, I don't think the Japanese yen is going to weaken to infinity. I think at some point, like, this Japanese yen is going to hold firm. They're the one central bank that is still raising rates right now compared to everyone cutting rates. And you got to wonder how that plays out. So I think it still is kind of in the hedge camp for me, although not as aggressive as some of the futures hedges I have. It could also be something that if it breaks and goes higher, I would like to benefit from that move. Germany, like I said yesterday, look for some type of like cup and handle formation. We dropped aggressively. This could work either direction, but I think from this flush down, if this pulls into a bullish pattern, that looks like a cup and handle. So we drop aggressively, we V bottom, we come back up here for some indecision, then we see if it can break and go higher. So I'd be looking for a trade like that to see if Germany can get back to highs. This would be in line with the early rotation we saw out of the U.S. Germany was one of the best performing countries this year, along with some other Eurozone countries, and all of a sudden that was just reset with that kind of systemic risk we saw over over the April 7th through the 11th. Oil, I didn't mean to skip oil. Oil, it's up. This little like flashy bottom is in. I don't know. I'm still very skeptical that oil can get above the 200 moving average. We did break this floor, so if you're lucky on the long side for oil, maybe coming back to like $65 or $66. If that becomes resistance, we could come back down and revisit the lows, right? I don't think oil is going to be like breaking and then breaking. I don't think oil is going to 80, 90 bucks. I don't. So I think if oil is going to go from this low and coming back to what is support, all this support back here to become resistance, we probably have room to run to like 65 to 65.50. So if you're long, that's about it. I would expect this to still be a high that's relatively safe. This would be a low that's relatively safe. I'm sure there's some oil traders that are just doing strangles, doing iron condors, just selling some premium, and just trying to pull in some income as it's just very slow and choppy for the next little bit. UNH we talked about. Yeah, there was a big miss in earnings. It was down like 19-20%. It was a 4 times earnings print. So I expected to see about a $40 move, and it went 120 bucks. So I guess it'd be about a three times earnings print. So that's just a big whiff. But I did put on a trade on UNH to see if I can catch something around 440, see if it could fill the gap. Okay. All right. We did gold, we did silver, we did Bitcoin. Coinbase 172. I got a Coinbase earlier for profit. That was good. Closed out about 95% of that credit. Copper still looks good for next week. Japanese yen I was on. FXY I'm going to hang on to it a little bit. Chart alarm set. I'll debate on this. I might take the profit. I might take the profit and move on. But if the Japanese yen catches some safe haven bid, it may or may not, but something tells me that the Swiss has been the better safe haven this year versus the Japanese yen and the dollar. EWJ, I'm in profit. I want to see if this gets back to the highs around 71.50. So let me set a $71 chart alarm. That'd be up about $6 a share. It's not bad. I would take that. I'd take that win. If I get up there, I'd be up a little bit of profit, maybe $5,000 or so. I'll see. Germany, we did looking for like a cup and handle pattern. FTSE, same thing. I just like the structure less. I still like Euro stocks and Germany better.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.